Taking a look at Dogecoin, we can see that Dogecoin is continuing to move sideways, very similar to the previous moves down, which is a good sign for accumulation. If we do take our fib from the high for the cycle down to the low, we can see that Dogecoin is still below the 2 or the 382 retracement. So we'll actually label this. And if we pull our fib up to this second wick here, you can see we're below the 236 retracement, and the 382 moves slightly higher at about 22 cents. So that would mean that as long as Dogecoin is below 22 cents, it is actually still considered either bearish or getting accumulated, which means that there's no reason to assume that it's going to move higher until it gets over 22 cents. However, you can see in the short term, we're actually below the 236 retracement at 18.4, which would also suggest that Dogecoin is in the short term still technically bearish or getting accumulated. Once it gets over 1846, there should be a move up to about that first 382 at 20 cents. And then if we can get over 20 cents, we'd be looking for a move up to about 22 cents. Now, you can actually zoom out and see that the major downtrend is all the way up here, which is most likely going to be at the 618 retracement. And you can see that it is. So we can argue that once Dogecoin, or if Dogecoin, gets over this 618 retracement at 29 cents, you would be breaking the downtrend and the 618 retracement, which would confirm that a new bull run would actually begin, and a move up to 83 cents or 70 cents would be in play. But again, obviously, in order for that to be the case, we have to see Dogecoin get over this 382 retracement, and obviously the 236 retracement as well, in my opinion.